Welcome to my channel. Please like, comment and subscribe. This is a continuing of the previous video about choosing a life insurance beneficiary. After designating a beneficiary, then you can decide how the death benefit will be paid. So here, number 2. Deciding how the death benefit will be paid. There are also options when choosing how the death benefit is paid to beneficiaries. First, per capita, by head. In this case, the amount is split equally between all beneficiaries of the children. And second, per steps, by branches. This means that if a child predeceases the policyholder, his or her children, the branches receive what would otherwise be shared among the living children. Per strips is a valuable tool for protecting grandchildren, particularly if they have lost a parent. And the number 3, setting up a trust. When it comes to protecting grandchildren or even that pair of big girls who were your best friends during your later years, nothing works as well as setting up a trust for all, or at least some, of the money in your policy. With a trust, the life insurance proceeds automatically go into the trust and not the estate. But if you decide to take this route, it is critical to find good trustees. You might want to ensure that the young beneficiary does not squander his inheritance on a Lamborghini and forget about college. You may also want to guarantee that a favorite charity receives the money needed to help end world hunger or just prevent the dogs from being taken to the pound. A trust is a way to accomplish this. It keeps your hand on the tiller on your financial ship even after you are gone. An attorney can help you make a trust as part of an estate plan. Think of it as one of the notable times in your life when you, and only you, get to decide what is the right choice. After all, this is a personal decision and you can do as you please. Life insurance is a legal contract that can seldom be challenged, except under very special circumstances, and is even less likely to be overturned in court than a will. You may offend someone or several people with your choice of beneficiary, but what can they do about it? The truth is, unless you tell them ahead of time, they probably will not find out they are not your life insurance beneficiaries until you are dead. It is a good idea to review your life insurance beneficiaries at least once a year to make sure you are still comfortable with who you have listed. Divorce, marriage, or the death of a loved one are all instances that may cause you to consider your beneficiaries. While a life insurance policy is a contract, it is important to remember that it is not set in stone. It is a living document, at least while the policyholder is alive, and its beneficiaries can usually be changed at any time with either a request form or online. Your likes and dislikes can lead to change. For example, one child may step up to help during an illness or injury while another sits on the bench. Divorce and remarriage can also lead to change, particularly if there are new children to consider. If you and your spouse are ending your marriage, it is prudent to know how life insurance works during a divorce. A settlement might include a stipulation that one or both spouses maintain life insurance, especially if they are going to owe alimony or child support. Since your life can constantly change and people can come and go, insurers recommend naming contingent beneficiaries. These are people or entities like charities that would receive the money if the primary beneficiary has died. This is something that should always be considered, especially if your spouse is a primary beneficiary and you are growing old together. Thank you very much for watching. You can also find many other information and explanation about life insurance, and then health insurance, travel insurance, business insurance, student insurance through this channel. Don't forget to always give your like, comment, and subscribe. And see you in the other video.